Good morning and welcome to Trading with Larry. I'm glad you guys could be with us for our first show today. I'm very, very excited. I'll be joined every day by Eric Shamalov, who's in the corner over there, and behind me, Thomas Maples, my analyst. And we're going to be coming to you every single day of the week. We're going to take Friday off. But you'll still be able to send questions to me. And I do an Ask Me Anything show on Friday. So we're here every day for you, guiding you through the market's movements and trying to get you ready for the trading day ahead. I think the insight that we're going to give you is going to be really, really good. We're going to cover all the markets across the world and give you guys a setup or multiple setups for the trading day ahead. So here we are, we're starting, and I'm really, really excited. And bringing Eric Shamaloff in to say good morning to everybody.
Good morning, everyone. Very happy to be here. It's been a long time coming, Larry, so very excited about this.
Yeah, it is. Our market newsletter goes out to hundreds of thousands of people, and now they have the ability to see us on a daily basis live. And I'm happy about that. And ironically, we're coming to you this morning on a crazy morning where the markets are up multiple percent across the board on every market. They had the trade meeting over in Geneva, Switzerland, and we're going to get into what really happened. But they came out saying they're pausing the tariffs for 90 days so that they can make a more extensive trade deal, which obviously is very, very good. But the market reaction is been pretty unbelievable. So we'll discuss that a
Oh,
little.
well, it's not just that. I mean, they're slashing the tariffs from 145% down to 30% for the time being. So those shipping containers are going to start coming in. I think, right?
You really think they can handle 30? You think people can handle 30% tariffs? Like they're water. I was
Well,
talking to
that's what
someone.
Pessimist was
Listen, I was talking
telling
to someone
Bloomberg
this week,
Radio
and
this morning.
listen, all the manufacturers are moving away from China anyway. So it's sort of pseudo irrelevant. It's what Besson said as well. It's really giving people a little bit of time to make moves, but nobody has that kind of inherent profit in their products to make money with a 30% tariff or 40 or 50, and we're not even really sure what will end up happening. And to me, this is really this really goes back to the stock market, and the market had a horrible adverse reaction to tariffs that were put on April 2nd, Liberation Day, which was quote unquote the biggest day. Okay, it was humongous, and we're going to get revenue from all these countries, and it's going to pay our debt. And this is a great thing. Well, they got egg thrown on their face. Markets went down massively. They were scrambling and scrambling, and this is part of the scramble. Because if you look at it, the last time in 2018 when Trump put tariffs on China, that negotiation, even to get one little deal done, took almost a year. This time they went over there, which we discussed late last week. We wanted to go over there. We wanted to. They weren't having a trade talks with us. No way. They were hunkered down. They've made trade deals. And Thomas knows this from behind me. We talked about this morning. They've made trade deals across the world with other places to sell their products. So really, this was like a scramble. Obviously, it's better news, but my question is, why is the market higher than when we initiated tariffs on 150 nations, of which right now we have one trade pause, one non comprehensive trade deal? So I think that, obviously it's good news, and the markets were not expecting that they would even sit down, at the table for very long. watching, if you were watching the trading action on over the weekend, because there were a couple of markets that trade not actively, but China supposedly walked out of the meeting early on, and the S&P futures were down basically 1.5%. So the move now is like a 5% move. But I'll throw it to you. You could tell me your thoughts on it. I mean, those are my thoughts. I don't think, before I throw it to you, I don't think that this is a done deal by any means. And my thought is, why does Trump now not want tariffs when he wanted tariffs to begin with? And it's been only a month.
Look, you ask why is the market up? Uh,
No, I didn't ask
there's
why the
some sort
market
of
was
done
up.
deal.
No, I did not ask why the market is up. I asked why. I know why the market's up. I asked why the market is trading higher than whenever they talked about putting tariffs in. It's now almost 2.5% higher. So that was really the question. It wasn't that we're higher today. I understand why we're higher today.
I think they're anticipating uh, the opening up. Trump wants all these countries opened up to all these industries. You see Tesla up a lot. LNG is a big one. Exporting energy to China would be a huge deal. Pharma. So I think the market is trying very hard to look past the short term and seeing what's on the longer term horizon in terms of uh, increased access overseas. So that could be. Look, I'm looking at the LNG market. I'm long stocks like Cheniere, and I hope that there will be some sort of trade deal specifically for energy. We have a ton of energy here. We have capacity, and having a market like China open up for our energy products would be, I think, very big. But there's other news out there. There's the pharmaceutical news. Trump had that executive order this morning to bring down prices on drugs. So there's a lot going on. And then he's going to the Middle East. He's trying to get $1 trillion from Saudi Arabia, another trillion from Qatar. There could be a crypto announcement there. I don't know what it's going to be, but the market is
What do you
very,
mean
yeah.
you don't know? You know exactly what it's going to be. Buy Trump coin. Hey, come on. This is, listen, on the surface, it's very good that we're getting this done at this moment. This is a complete, in my mind, as a trader, looking outside of what the particular news is, it's a great area to lighten your portfolio and to make moves that you wouldn't have had the opportunity to make about a month ago. So, that's the way we're playing it. I'm not debating whether or not this is good news for the split moment, but listen, knowing what you know about Donald Trump, this is not the end of this. He's going to say everything's unfair and they're not abiding by the deal or whatever. But the shocking takeaway for me from the weekend is that they were able in less than 5 hours, okay, to basically drop the tariffs. So I think they went there with a preconceived notion of basically, I would call it folding on heavy tariffs to China. They realized, listen,
Oh,
they
stop that.
realized
That's too early for that. How is this a fold? This is not a
it's a fold
fold.
because we gave them 90 days. Why are we taking the tariffs off for 90 days?
Our
My
tariffs are
thing
higher
is,
than theirs. They brought theirs down to like 10%. So,
Eric, we can't do this again. They don't
what would
buy
you rather have?
anything.
Would you
They
rather
don't
have
buy anything from
the
us.
opening up of China for all these industries that where you can get a lot of growth? I don't think this
Like
is a
what
fold.
industry? I was over in Asia, okay, for 2.5 weeks. Okay. I did not visit China, but I watched the culture. Okay. And they're not buying anything from us. There's not. I was in Japan for an extended period of time, and I literally did what I call my own channel checks. And I checked, and I didn't see anything from the United States in any store, okay, for any
Right,
product.
that's on the consumer side, but more on the institutional side in the in industry, you see it. It's there. The world
You may see it,
are
but they're
technology
not
are
buying it. They're not
well.
buying it. They're not buying it. They don't. You think they feel good? You think the world feels good about what just happened in the last month to them? I mean, yeah, they're feeling great. This is like getting punched in the face by someone. Okay, you don't forget it. You don't forget it. But I want to move on to, like, we'll come back to this because we could talk for an hour, literally, about this, and we
Well,
should.
despite the fact maybe you sound a little bearish, I do want to point out that you went long Tesla, and I'm very curious to know what you're going to do with that position today because
I'm
I'm
gonna sell it as soon as the market opens. I'm hoping the market holds up here. So we're gonna get out of that position. We do have a short crypto or Bitcoin position. Ironically, I wanted to cover markets a little different, but you're sort of touching on my position. So, um, the crypto market is actually lower. I mean, Bitcoin, when I talk about crypto, Bitcoin is actually lower. Uh, So that to me looks like maybe that thing is run out of steam for the moment. Won't take out the high and may come in a little bit here as the market will settle in here. And the moves are algorithmic, so they're very, very extreme. But and then we have a short S&P and a short Nasdaq, which are not going to work out today. So again, my positions across the board for the opportunistic trader and our products are fairly light, but they're not the greatest. But the one caveat is, Bitcoin is not up, so that's sort of half our position here. But I want to touch on let's touch on S&P. I don't know if you can pull a chart on it. This is my favorite product to trade and where I've probably traded the most in my career. And at one time, uh, back in the mid 2000s, till probably 2012, 13, I was the largest or one of the largest S&P traders in the world. So if you could pull a chart on that,
Well, here's a daily chart of the S&P.
right. So, go back to April 2nd, okay, Liberation Day. You could see that the markets are higher than that day. And to me, I'm not really sure why. Um, I just think that this created uncertainty in the market, okay? And it's put people on their back foot. So I think we're almost 2 to 3% higher than that is surprising to me. That's why I think this level in S&P is not a bad level to put on a short through
Well, we're gonna
options.
probably we're gonna open up on the S&P what probably around 5,800 today.
The
Is that correct?
futures are at 58, 50, so I would say higher than that. I mean, we're up.
Yeah. So now we're gonna be trading above the 200-day average, above the all these cockamamie averages that everybody follows.
Yeah, but how could you?
So
Let me ask you honestly, how could you follow those averages to make a trade
I said
when
cockamamie. I don't look. I know everybody
I
else likes to look.
understand, but like Thomas was saying to me on Thursday or even Friday, he's like, we're below the 200 day. So we were below the 200 day on Thursday or Friday. So what does it
Look,
mean?
what I will tell you, there's an old adage, right, that bad things happen below the 200-day, which is this yellow line here. Okay, that's your 200-day. And look, I mean, it got proven correct. Very bad things happen. Like people went out of business below the 200-day moving average this year.
I
Now,
don't. I mean, but look at the chart. It's so you had 7 days before you made the low of the move. I mean, these
right.
moves are, listen, one thing I'll say from my 40 years of trading experience here these moves are very, very erratic and very, very extreme. And again, I think that's caused by algos reading through headlines, not having,
Yeah.
human beings really running what's going on here. So you can't, what I always say, and I say it all the time, price is price. So today the price is 58.50 on the S&P, and this is where we operate from. So you operate from where the price is. I don't think because we're moving above the 200-day moving average off of some headlines makes this thing a buy. I mean, is that what you're saying? Like if we're
No,
above the
that's not.
200-day?
No, I'm just anticipating what the headlines are going to be later on today. And,
I just think the moves are
those
so
kind of headlines
extreme.
get people excited that the bear market is over. And you know what? After
Whoa,
today,
whoa,
if the
whoa. Wait a second.
here,
The bear
they're going
market is
to
over?
be
Dude, the
they're
bear
going to be
market was one day. We were in a bear market in S&P for one day. One day. And I don't
that's
even
been
know if it closed in a bear market. You might want to check that out. I don't know if it closed in a bear market. So I don't know what bear market. I mean, if that's the bear market, wait, it's the same bear market that no retail customers sold one share of stock. Okay. I mean, come on. This was so fast. Back in the day when we had a bear move or something that was negative, people, it would sit there and people would have to make a move. No one even had time to make a move. You had Palantir go from 125 down to 70 or 68, back to above 125, all in 1 month. So no one really made a move, but you know,
yeah, but nobody made a move, and you have to commend retail for actually not making a move. Once again, they get proven correct and look smarter than the quote unquote institutional trader.
Eric, they were frozen. Retail never sells. They'll never sell a share of stock ever. Never.
Okay,
Retail
and
does not
at
trade.
the
It
end of
does
the
not.
day, they get proven right. They
They did
got proven
for
right
now,
again.
but if they don't sell again and we happen to come back in again, then what are you going to say? Oh, well, they had their chance and they didn't sell and whatever. So, I mean, I don't think retail really plays the role that we need it to on a day-to-day basis for what we do on our show by telling people what's going on. It's much more institutional and hedge fund related action because those guys are the guys that are maneuvering today. So today, if a hedge fund is caught short or isn't long, they're going to have decisions to make because they're behind the eight ball. And if you look at the S&P, we're pretty much where the S&P start the year. I mean, we're close to flat, if not up. I mean, we're back. So the market in S&P was down 20%. What day did it
No, I
make the low?
started S&P started 58.81. That's where it closed
Okay,
2024.
so we're right there. We're down a percent.
Right,
Okay. Wait.
it's
And what
incredible.
day was the market? What day, can you pull a chart? What day did the market close in a bear market?
I don't think we ever actually got technically
What?
into.
Yeah, we did. We were
We
100%.
did.
The S&P didn't? I think it was
Yeah, maybe
intraday.
the Nasdaq did.
I think the S&P intraday was in it. It never closed in a bear market. So the S&P was never in a bear market. It traded intraday in a bear market. The Nasdaq was down over almost 30% off the high. So all of those moves have been retraced in less than 2.5, 3 weeks. So it's pretty amazing.
What's interesting, what I will tell you, take a look at this chart. This is this is my favorite, right? Nasdaq over S&P spread. All throughout April, you had Liberation Day, you had the lows of the market. The Nasdaq was outperforming this whole time that the market that the S&P spent below the 200-day moving average. So during the worst of it, there were a couple of signs or clues that maybe this is going to be a short term thing.
Okay, okay, Maestro. After the fact, whatever you say, dude, you shouldn't be wearing a Prada jacket. You should be wearing a full gold jacket, dude.
Yeah.
Since it was that, it
On
was
my
really,
Monday morning quarterback armchair. Is that right?
dude, it's easy. I love it. That's why it's great to have you on. Okay, because
Yeah.
like I'm Mr. Pessimist, and you're like the eternal optimist that you don't like to sell any market, and I don't really
But
love
why not?
buying
But
any
why
market.
not? Why not be an Well, look, you know, you can't be always optimistic, but most of the time, why not?
I don't
Give
know
Trump a
because I
chance. You
think
know, he's
I
been coming
think
through.
I think in the market it's very very easy to buy any market. Like it's just a natural thing to buy. Everyone wants to buy, okay, and be in it. And really, the art is to know how to buy, okay. And then the most important part of the art is to know how to sell, okay. Know how to buy and sell and get out. And I saw it early on. I've managed probably I'd say 300 plus traders, maybe more in my career. Okay. And the one thing that I've seen most is it's everyone wants to buy. And then when they sell, and I've seen this with you, they have complete remorse for they think it's like a piece of art or like one of their children in their
They
house
only do that
that
with gold. I
that
only do that with gold. I get upset when I short gold. That's the only
well,
one.
not even shorting gold. You buy Netflix and then you sell it, and then you talk about Netflix for the next 4 months of where
Yeah,
you sold it and how could you sell it. And like to
right.
become really, really good at trading, you have to be not emotionally involved with what you're buying or selling. It's truly important. And I'll give a quick lesson or story of what happened to me. So this is a true story. In 9/11, okay, the equity markets never opened for trading the day of 9/11 when the towers fell, okay? But I'm a futures trader at heart, and I was trading S&P futures, and I saw what was going on, and I was selling, 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 because I thought it was negative news for the market. And then what happened was it came on the tape. It said small plane hits the World Trade Center, and the market rallied up. And I was thinking to myself, no matter what, how could that be good? So I sold more, and I had a very big short position. And then when the second plane went in, we were still trading. Okay, we were trading actively, and I had a very large position. We saw the second plane come in, and then I decided, listen, I didn't want to make money off of this scenario, so I closed all my positions, which we made a lot of money, but we could have made fortunes of money, but I didn't really want to do that. And then what the lesson that I learned from this was the market was closed for a full week of trading. I don't know if you remember that, but there was no trading. We were trading Europe and Asia for the markets. But anyway, to make a long story short, the market reopens. Okay, I think it was on a Monday morning, and I start buying the market because I wanted to be Mr. Patriot, and I had a vested position in trying to help the world. Well, guess what? Okay, no one else had that freaking thing in mind, and I got rinsed. Okay, to the point where I lost more money than I made on my short trade, which could have been one of the greatest trades in my trading history. But I didn't want to. I got emotional, and the point I'm trying to bring up is you got to take full emotion out of trading. You can't feel like you have a vested interest in the company or you love the company. Like it's just a trade, and you're in and out of it and on to the next. So the lesson in that was I became emotional and had a vested interest in something that I probably shouldn't have had, and then it ended up costing me a lot of money. and I didn't help anyone, and I hurt myself. So the point is here, um, you want to trade with an open mind. You don't want to fall in love with a position. I've seen that kill people. Where people, I'll tell you, I've had like 4 or 5 situations in my career where we were short positions that we knew we were right, but our timing was wrong. So timing is critically the most important thing to trading. Um, you know, so we were short. I don't know if you remember the phone. It was called um, BlackBerry. And it was what every business was using, but we saw it tailing off. But the stock never came in. And guess what? We were short. We lost money. We had a cover. And then the stock went out of business, basically, or went down to zero. So the lesson here is just trade. Don't fall in love with positions, and become, sort of agnostic to what you're doing and the reasons that you're doing it. So, I just wanted to throw that story in. But
So yeah, Larry, you have a few different kinds of products that you offer to your subscribers. You've been doing it for a long time. I've had the great privilege of helping you do that. So, how do you like? What do you want to tell these people about the best way to get the most out of your trading alerts? Because you have a forex product, you have an SPX credit spread strategy, you have a long vol strategy. What is the best way to get the most out of your trading service?
well, I would think that you would want to have all the services, because even though they're all separate and operate independently, they kind of all work around each other. So by having one and the other, you have the ability to make in both. But usually, when one isn't killing it, another one is. So that's sort of, it's built
They
in a
all have
way.
expectancy, but in an uncorrelated way.
Well, I look at it, and even though it's probably not like this, it's kind of like when I had my hedge fund for many, many years, or even when I was trading prop for Spear Leads and Kellogg. We're running like sort of like a macro book, so we're touching
Yeah.
on all markets, and we have the ability to make money in all of them. And, this year, of my products, only one product is down. All the other products are up money. They were all up, but we got caught a little bit in the currency market. So that's our only product that we got to, work back from. But so far this year, it's, with volatility being up as much as it was for about a month and a half, we were able to really make a lot of money. But now we have people writing in, and they're like, "You're not trading a lot. You've sort of slowed down." And the reason is because the market's doing stuff like this, which is operating in a way that's not favorable for what I do. So we're remaining sort of on the sidelines here, still there. May put some shorts on today. I like this up opening, but I want to touch on pretty much all the markets that we cover. So right now we touched on the S&P market. We sort of told the story of why it is where it is, but I want to touch on a market that I think is critically important, and I think people should put this on their screen and basically have it next to the equity markets, and that's the bond market, both 10 and 30 years. And we've been talking about it for weeks and weeks and weeks, and bond yields are acting were acting in a very weird way when things looked really, really weak, like we were 100% going into a recession or minimally a major slowdown. These bond yields, which should have been ticking down below 4%, which is still high, are now ticking up at almost 4.5%. And that's what we call our Mendoza line. And if it gets above that, it concerns me. So I'm a little bit concerned about the bond market. Obviously, market has good news in it. I'm gonna sell the news guy this morning. I don't think it's going to come in to like unchanged or anything like that, but you may get a little bit of softness, later in the day today when they parse through the deal. So I I think in the 10-year note, it's important to watch the 4.5 level. If it ticks there, there could be some kind of basically reallocation trade from portfolio managers where they buy the bonds and sell the equities, because that is sort of pressing out a line here. So keep an eye on that.
You know
Um,
what's interesting about rates? When the market was at the low, rates were going up. Everybody was making a big deal about that. Even the Secretary came out. Trump came out, said he's paying attention to the bond market. Rates are still at the same level, even though the market has gone up. Why do you think that is?
Rates are at a higher level. And I think that it's because of a number of different things. I think it's because we have to finance our debt now. Trump came up with this beautiful idea of getting all, look back on some of the tweets and whatnot, how he's going to get revenue from tariffs and how big and beautiful it is, and they're going to pay the deficit. So now, Eric, since they're taking tariffs down to zero, or very low to everyone around the world, what's it doing for us? Like, I know you think a 10% tariff is opening up trading. I mean, they're not opening up trading. I'm
I
just
think the
telling you.
story yet to be told. I think this is just the first step, you know. But I am kind of puzzled by why rates haven't been able to come off here, even though there's
Well, now you know. Now
so
you
much
know.
good news out there.
Yeah, but now you know why. I just told you why. They got to finance the debt. Okay. They got to issue massive amounts of bonds. Okay. To finance the debt that they can't finance. That's number one. Number two, the perception
Why is
right
it?
now.
Because the tariffs are going to be lower, so they need that revenue from somewhere else.
Obviously, that's number one. And number two, if they're doing all this growth and all these different things that you're saying they're gonna do, what does that do for the market? It creates growth. So now we're going from what we thought was a definite recession, okay, to not even a slowdown. So why would bonds go down? Bonds prices should go down and yield should go up, because basically they are now have to finance their debt, and now the market isn't slowing, and that'll lead us into the next market that we look at, and that's crude oil. Crude oil last Monday was trading at $55. Now oil is exploding up and is trading basically almost $64. And if it gets above 65, it's it's gone. It's out. It's broken out for sure. It's probably broken out here. But here's the question that I have. Let's bring it back to Trump. Trump tweeted last week the price of oil, gasoline is $1.98. None of that is true. The price of food is dropping. None of that is true. So doesn't this go against what he really wants? And he got OPEC a week ago, last weekend, to raise output. So this trade isn't working. So I think a lot of these trades are not working the way the market conventionally sees them working. So oil going up is a large negative, especially for the tweeting Trump, or whatever, him going how low the prices are. It's not, now it's going the other way. So it's, a lot of this stuff, there's a lot of counter currents here. So these are them. I mean, the administration wants oil lower. They talk about it all the time. Oil's going higher, correct? So what is he thinking about that?
Oil's been going higher also because of a change in market sentiment. We were discussing it, you and I earlier. The back end of the crude curve has been pricing in recession, and then that has been coming off in the back end of the curve. So oil naturally is going to go up from that. But I don't think oil, you look at oil versus April 2nd levels, April 9th levels. It's not really up that much. I kind of are you do you think oil is going higher from here or
I don't really have an opinion in oil. It could. I mean, I don't know how much they're going to run with this, tariff situation. So I think this is really more of a growth story. Whether
yeah.
we're going to be able to grow out of here. I mean, it was pretty much 100% written in stone that we were in a recession. The numbers will never show it probably, but we probably were in a recession. So, everybody's backpedaling here. The next market I want to touch on is gold, which is your favorite. Um, so I don't know if you want to talk about it. It was down about 100 and change. It's come off a little bit off the low, but
There's not much to talk about. It's risk on. Gold has been dropping. That has been what's interesting. Gold has never had like gold for a really long time. Did not correlate with the market at all. But recently, last couple of months, as all of this tariff related price action that we see in the market, there has been that negative relationship. Market up, gold down, and market down, gold up. And you see that again today, market up, gold down. But there's
yeah, but
what is there?
let me just preface that you actually threw something in there that was very interesting and actually for trading and people trading out there is very, very important and as true could be. You said when you started, even though you sound like a broken, you love when gold goes up, so you're like all broken.
I'll be
But
honest with
you
you.
said,
Yes,
you
I like
said
it. I like it.
you said though the one thing you said that was interesting that I've picked up on for a long time and why I continue to say that gold has made the high of the move. I know you don't think so for the year. I think the high of the year could definitely be in gold. And I would say this, you said something that I noticed about a year and a half ago was that gold was going up no matter what the market did. If the market had a day like this, you'd turn around and gold would be up. Okay. That was when gold was like 2,400, 2,500. Okay. Then it literally ran up to 3,500. And then in a classic format, made a blow off top. Okay. And it's very,
I don't
it's kind of, listen, well, listen, it is 100% a blow off top because we've sold off over 10%.
know. Okay.
But let me say this, okay? It's almost like seeing like a volcano explode. Like if you go somewhere to Hawaii and you happen to be there when it explodes, it's like a rare thing. And it used to be more so in the 80s, especially. We talk about blow off tops all the time. We don't have that in the algorithmic world the same way because the algos are in there, providing support up and down for these markets. So I think you actually saw a blow off top on heavy volume, notionally the highest volume in gold above 3,500, and we've traded down to 3,200, which is over a 10% move. So
Yeah,
it
you
is
saw volume.
definitely.
Hey, the big players in the market remain central banks. Do you think they're going to stop buying?
How
I
do
don't
I
think
know
so.
what
And
they're
then
going to
you
do?
have,
I
and
don't
then
work
you
in a central bank. I have only you know. You must. What central bank do you work
have all
for?
the connections with all the central banks. They call
I'm
me all the
sure you
time. They
do.
tell me they're buying gold.
You're going to go, Eric. We're not buying today.
Gold today. Yep, that's my edge. That's my
You're
market
making me
edge.
laugh. Okay, so the central banks are
And then the
whatever.
other thing is the ETF holders, and there was just basically that one day that you call the blow off top day. I think that was May 7th. And that was the only real day that I saw that there were big outflows out of the ETF. Speaking of which, you're launching an ETF pretty soon.
Yes, sir. One of these days it'll be around. We'll talk more about that at a later date, but I want to get close to
Are
wrapping.
you
So
allocating? Are you allocating to me? When are you allocating to me? That's what I want to know.
to you, when you show me your P&L, which you still refuse to do. Let me tell you, I'm gonna tell one
I
more
tell you
quick
my
story
P&L
because
every day.
you
Don't go
you
there. I'll tell
you
you every
you
day.
you led me in. Okay, so here's the deal: the beauty of what I've done in my career and sort of my resume is I have a document. Like, I'm in the newsletter business. I'm providing, which I love, by the way. I love helping people. I love helping people that need the help, more retail oriented, and I really love what I'm doing. But in the industry, there's very, very few people that have a documented, audited, true P&L. And, by being a true trader for all of these years and a money manager and a hedge fund manager, is that all of my P&L is documented. I could never hide my P&L. I could never get away from, showing it. So it's funny that, many, many people out there can say whatever, but if you're not audited and you didn't have a hedge fund or you didn't trade prop for a very large firm like I did, the P&L is sort of could be not real. So anyway, I haven't
Gotta
seen
have
your
the
P&L yet, so I'm
gotta have the
still waiting.
statements.
I'm still waiting. Touchdown T behind me and me are waiting. You know my email. You can send it to Larry at the Opportunistic Trader, and
Want my P&L?
I'd
You
love
got it.
to analyze it. But
You know what my P&L is. I'll send it to you. I'll send you my whole P&L.
I love it. I love it. But the one thing about trading that's really true is you have to live and die by your P&L on a daily basis. And
Yeah.
once you get used to doing that, it becomes a lot easier. It's never fun, but that's what we do
Well, here's
here.
the thing that I learned. Like over time, you start to not really get affected by a bad day because you gain that confidence in your process, in the things that you look at. You see what your edge is, you know what your edge is, and if you could zero in on that, the bad days don't affect you. You know you're coming back the
Well,
next
that
day.
all, listen, you know what? In true reality, that is true, but it so what I would say, and this would probably be a full podcast, but it's money management and understanding how to come back. Never losing more than you have made back, and once you do that, you're able to come back. And it's funny because as you learn to grow, your P&L moves more and more and more, but you have to be able to come back, and it firsthand to come back from a drawdown is extremely difficult because
Well, it also depends. It also depends on your investor. Also, I
no,
found it's
no,
also that.
that's not true. That's a cop out. Your
That's
investor
a
is
cop
a
out.
cop out, 100%, because it's your P&L, it's your money. It's only in your head that if you have an investor, that the investor is not giving you the chance to make it back. But I want to get more into that also at another time because it's really important and it's one of the most important things to trading. But what I'd like to do, since we're getting close to wrapping and we're getting close to the opening, I want to say, this is our first day. I'm happy everybody is with us. But for me, what I want people to get from this is, obviously, a lot of the technical stuff that you're handling, but more methodology, how to manage money, how to manage your own money, how to use risk discipline, how to use your own P&L, positive P&L to to
Scale up.
scale up, get bigger, make more profits. So I would say overall that the most important thing is money management. And we're going to get into that skill. Touching on all the markets that we will is also important. Like I don't want to trade 25 markets. I want to know 2 to 5 markets and that's it. And keep coming back and back and back. And that's what I want to give everybody here. I'm happy
That's your
everybody joined us.
X. That's your SPX credit spread strategies every day, conveyor belt,
Yeah.
like a factory, right?
Yeah, well, listen, we'll discuss that as well more. I mean, you have to stick with that trading strategy. Sometimes it, gets a little bit cold, and but it's tried and true over a bunch of years. But like, so for today, what I would leave you with is, obviously very positive day. It's funny that we're starting the show on a 3% up day, one of the biggest up days in
No,
very
it's
many
funny when
years.
you pressed me on Friday for a market prediction, up or down, and I just couldn't say down. I just
But you
couldn't do
couldn't
it.
stay up. So how'd you help anybody?
Yeah, you're right. You're right.
So, today again, if I were in a long position, I would lighten a little bit here. A lot of positive news in the market. Um, we're going to look to potentially for our S&P trader to put on a short call with about 1% coverage on the upside as a hedge. As far as our positions for our other products, we're going to assess what we're going to do. We're not adding to positions today. Um, so that's sort of the setup for today. And we'll be back to everyone tomorrow with more color on today and more insight into trading. Thanks for joining me.
Good luck.